What is going on, everyone? My name is Trader Cat, and I would like to introduce you to FVG Mitigation Pro, an introduction to my indicator that I created on MT5. Okay, so here we are in my MT5 terminal on the 4-hour time frame for the DE30 or the German DAX. And yeah, I wanted to just start off by explaining to you, for anyone who is new to trading, what a fair value gap is, or an FVG in its acronym. So a fair value gap is a chart pattern in financial trading that indicates a market imbalance. It was originally coined by ICT, and it's a 3-candle structure. It has to be a 3-candle structure. It occurs when aggressive buying or selling rapidly moves the price, leaving a gap or empty zone between the first and the third candles in a 3-candle sequence. So just looking at an example of what a fair value gap would be, zooming into these 3 specific 4-hour candles, you can see that here's the first, there's the second, there's the third. The first one wicked into the body of the second candle. Even though the first candle occurred before the second candle, we can say that that's where it wicked into in relation to it. And the third candle wicked into the body towards its high of the second candle. The fact that these 2 candles, the lower wick of the first and the higher wick of the third, did not meet and created this price gap, or this price imbalance. This is what we call a fair value gap. Fair value gaps can be used as draws of liquidity, so effectively a place in the market where you can expect the price to go and rebalance, potentially reject, and then move back out of it. It can be inverted. For example, in this case, here we have a bullish fair value gap because the price was moving higher. This fair value gap formed here, as you can see, the high wick of this candle. The first candle closed at this point. The third candle wicked into the body of the second and closed at that point. And the fact that they did not meet means that this is the fair value gap. As you can see, the price then turned around, eventually stabbed into the fair value gap, mitigated it by not even 25%, and then rapidly closed below. And that's what we call an inversion fair value gap. Now, I won't go too much into inversions because this indicator is purely with regards to fair value gaps. I have another fair value gap, inversion fair value gap indicator that I'm going to release. So yeah, I just wanted to also show you an example of what wouldn't be a fair value gap. Let's focus on these 3 candles. As you can see, the first candle wicks quite high into the body of the second, and the third wicks also into the body of the second. And the fact that these 2 wicks, this wick and this wick, meet, that is not a fair value gap because there is effectively a balanced market in terms of these 3 candles. So the reason why I created this indicator is because in the past I would always manually draw my fair value gaps, and as you can imagine, this adds a lot of time to my analysis every morning, especially mornings on Mondays when you're drawing all your fair value gaps from the previous week. And yeah, it just creates a muddled situation, especially when you're looking at a higher time frame fair value gap within or lower time frame fair value gaps within higher time fair value gaps, and also the fact that the rectangle drawing tool doesn't have a midpoint line I would always have to draw my own midpoint lines with the fib retracement tool, and that was just not user friendly. I know TradingView already has these midpoints within their rectangles, I believe, as well as probably their own fair value gap indicators. But if you're like me, who loves MT5 and is very used to MT5 and doesn't care for TradingView, then yeah, this is what I use, and this is what you can also use if you choose to support me. So yeah, let's get into the indicator now. Indicator, you can either look into your insert indicators and look for it there, usually in custom, after you run it on your system. But otherwise you can look at it through the navigator, FVG Mitigation Pro. And yeah, so let's get started here. In the first setting, we have the maximum FVGs to display. You can put this quite high. I haven't tested how high it can go, but more than 10 is probably too much. I like to keep mine around 8, depending on the time frame. Obviously, the lower the time frame, the more the fair value gaps, the more you probably need to see. I generally look at the 4 hours, so I keep it around 10, but in this case, we'll leave it at 20, just so we can see as many as possible. The number of bars to scan, this effectively just shows, or it's how many bars are scanned in order to figure out from where the fair value gaps are drawn. You generally don't need more than 1,000. I think 1,000 is even too much, but you can go as far back as you want. Just be careful that if you go too far back, it might slow your computer down, especially if you're showing the fair value gap indicator on many different instruments. I know MT5 can get slow, especially during market conditions that have a lot of liquidity and volatility. For example, during the New York Open, when the market is moving quite erratically. Okay, now we have the locked time frame. So there's multiple options here. Let's keep it as current. This effectively locks your time frame to the current time frame, and then it's like wherever you change it. So if you change from a 4 hour to a 1 hour, then the fair value gaps will go from showing on the 4 hour to the 1 hour time frame fair value gaps, and yeah, any time frame lower, it will show that as well, or the higher time frames too. I will show you the other what happens if we change this to any other one a little bit later. So when you want to do that and you don't want it to be locked to one time frame, you keep it as false. We'll leave it as false for now, just to show you how that works, and then yeah, we'll move from there. The bars to extend right is how far the fair value gaps are shown on your screen. Mine always stays at 50. If you don't want them to extend too far, you can have them a lot lower. If you want them to just show, for example, around here, per fair value gap, you can keep it as probably around 5. But I think 50 is the way to go, especially if you want to refer to them later. Then the opening gap filters, we will leave that for now. I'll explain it to you a little bit later. It's something a little bit different, so let's just let that be for now. And now we go down to mitigation behavior. So mitigation behavior, this is a tool that I've built into the indicator that colors or recolors partially mitigated fair value gaps. So effectively, these are fair value gaps that have been traded back into, but not fully traded 100%. So for example, if you're looking for a move towards the midpoint of the fair value gap and then a close back outside of it, that would be a partial mitigation. And what happens when these fair value gaps are partially mitigated is that they change color depending on what color you choose them to be. You don't have to have them change the color. You can make them the same color as your normal fair value gaps. But this just helps me know, in terms of my analysis, which fair value gaps have been traded into, so I know whether to regard them or not. When the fair value gaps are fully mitigated, then they actually disappear from your screen completely. So that's a tool that I've also built into it. And yeah, so in terms of the partial mitigation, I like to keep it as true. You don't have to have it as true. I like to have them kept as, let's keep them as silver for now. I think silver will be fine. Yeah, silver's good. Okay, and then the bullish fair value gaps. So you can either show the bullish ones or not. So say now you're only interested in the bearish ones, you could obviously leave out the bullish ones. If you have a specific bias, for example, and you don't want your screen to be muddled with the bullish ones, but in this case we'll keep it as true, and I think medium sea green for now, just for these purposes. And then you can choose to fill the body or have it as an outline. In this case, I'll keep it the body filled, but yeah, you can do whatever you want here, however you prefer your fair value gaps to be drawn. Then the bullish borders and styles, you can change that to, a dot or whichever, make the thickness higher. Yeah, whatever you want, fully customizable. Next is the bearish fair value gaps. Let's keep that as pale violet red. And everything else is true, solid 1. And then lastly, the midpoint line. I was thinking of putting in more quadrants for larger fair value gaps. I might consider creating a version 2 of this with the optionality to put more quadrants into the fair value gaps. I just felt for me that the 50% is the most important one, and having more can muddle your screen up. But if anyone would like that, just add a comment and I might consider it. Okay, let's keep that as a dot, and then let's see what happens when we say okay. There we go. So as you can see, these are the 4-hour fair value gaps. And yeah, here's the bearish ones. As you can see that there's a fair value gap there, another one here. Apologies, I just need to, I can see it's not showing the midpoint line. I think I might have pressed false there. Just make sure. Yep, keep that as true. And then as you can see, the midpoint line is showing. So yeah, as I was saying, the bearish fair value gaps are showing. These ones have not been mitigated, therefore they are kept red. As you can see, this was a bearish fair value gap that got mitigated here and then kept on getting traded into, and it remained, or it actually turned from red to silver. Now, I'm recording this on the weekend when the market is closed. I will create another video where during normal market time, market hours, where I will show you exactly in real time how the indicator changes color. For now, you have to just take it by my word and test it for yourself. But yeah, as you can see there, we have a bullish fair value gap here that did not get traded into. I know it looks like it did, but it did not. If we can zoom in even further, you can see that, just to prove it, the low of this third candle, I don't know if you can see at the bottom over here, but it is 24844.60, and the low of this candle is 24845.50. Therefore, it did not wick into that fair value gap, and it was not mitigated or partially mitigated. Therefore, it has not turned gray. So we only have one partially mitigated fair value gap here. If we zoom out, you can see that there's a lot more. There was one down here. And it got partially mitigated, not fully mitigated, otherwise it would have disappeared. I think this wick did not wick as low as the high of this candle. As we can see, the high of that candle is 24069.60, and the lows of this one is 24070. So therefore it did not fully mitigate it, and it is a partially mitigated fair value gap that got turned gray. Okay, so now that we've looked at these 4-hour fair value gaps, I'd like to show you what happens when we change the time frame to any other one. So for example, here, let's go to the 1 hour. As you can see now, we've dropped to the 1 hour, and we can see all the 1 hour time frame fair value gaps that have formed. These are all bearish ones. They have not been mitigated at any point clearly. Therefore, yeah, they have not turned gray. Zoom out a bit. There's your other 1 hour one. And if we even zoom out even more, here we have this one here. This one formed and then got wicked into, did not reach midpoint, closed back out, and the price moved higher. Drop down to the 30-minute. I know I don't really use the 30-minute much, but there's an example of a 30-minute mitigation. Price formed the fair value gap here. 30-minute wicked beautifully and closed below, back out of it, hit the midpoint, and this was probably a perfect continuation trade. I mean, if you just drew your fib between this high and this low, got to obviously past a 61.8 fib, even the 77 I think is around here, and then perfectly down. So if that's your methodology for a continuation low-hanging fruit trade, perfect. The 15-minute, as you can see, all the 15-minute fair value gaps. There's some lower time frame, or some ones on this towards the end of the day, and yeah, this is the indicator. You can flip between all the different time frames, and it automatically finds your fair value gaps, and it doesn't slow your computer down. Yeah, 5 minutes or so. So yeah, now I want to show you a different, basically something else that the indicator can do, where you can lock to one time frame. So let's go back to the 4 hour and then go into our settings and lock it. So now, yeah, as you can see, originally it was on current and false, but now, for example, so now you want to see the 4 hour time frame fair value gaps on all the other time frames. So lock it specifically to 4 hours. You put it on 4 hours and you keep that as true. Press OK. As you can see, because we're still in the 4 hour, nothing has changed. But then we move down to the 1 hour. And as you can see, this is that same 4 hour fair value gap, but just on a lower time frame, so that you can refer to it. This is proven because, as you can see, the low of this fair value gap is around 25100, somewhere around there. The high is around 25455. You go back to the 4 hour, as you can see, the low is 25100, somewhere around there, and the high is 25455. Exactly that. So yeah, it gives you the ability to lock it and then refer to it. I love locking it to the 4 hour. I think the 4 hour time frame is the best one to trade off in terms of higher time frame confluences and breaks of structures and the fair value gaps. So yeah, that's pretty much what I do. You can even have it even a lower time frame on the 15-minute As you can see, there's the 15-minute time frame, looking at the 4-hour fair value gaps. And yeah, it's just really user-friendly. I really love this this aspect about it. I don't think that there are indicators in the market that can do this, or people that have actually put thought into it. Yeah, so let me just play around with it a little bit more. Let's go back into the settings. So indicator list settings. Let's lock it to a 15-minute. And then let's go down to a 1-minute time frame. Let's scroll a little bit back to when the market was dropping. Yeah, so as you can see, this was a 15-minute fair value gap that formed and then got mitigated, but not fully mitigated. Traded beautifully around the midpoint, slightly above, and then closed back below, rejected again, and I think this would have been a good potential short once the structure was broken, but that's not financial advice at all. But yeah, this is effectively what the indicator does. But now I want to just move back towards the opening gaps and how that affects fair value gaps and why I have that setting built into it. So I've changed the setting back to show the 4-hour fair value gaps and lock it on the 4-hour. And I don't know if any of you noticed earlier, but there is actually a fair value gap here on the 4-hour that was not mitigated fully. It was partially mitigated, as you can see here and here and here. But why isn't it showing? And that's a good question. And the reason being is because the fair value gap, so these 3 candles, there exists something that we call a price discontinuity. So effectively, when a candle closes and then opens at a price that is away, effectively a gap that forms between the candles. So I've included a setting that allows you to consider or not consider fair value gaps that form when there's a price discontinuity within the candles. For example, this would have been a very big price discontinuity between these 3 candles. Effectively, you know, the fair value gap, the indicator, the fair value gap indicator would have drawn a fair value gap here, but it obviously wouldn't show now because it's been mitigated fully. But as you can see, it's difficult to consider this a true fair value gap when there's such a big price discontinuity, especially ones that form over the weekend or over new days. These are what we call new day opening gaps or new week opening gaps. These are completely separate, different things to fair value gaps. And when they're together, it could actually be quite confusing for new traders. So I've made an option that it can either consider them or not, depending on what you prefer. So another example occurred a little bit further back. I just want to find it over here. This one also, as you can see by the dates, 7th of April, 8th of April. So this one occurs over a day, so it's a new day opening gap that forms. And it's obviously not showing the fair value gap right now. But you'll see what happens when I go into the settings and change them. So going into the settings, we have the optionality to ignore patterns containing price discontinuities. Currently was on true. If you want to see them, put it on to false. Then this discontinuity size as a X average bar range, it's always just best to keep that as 1, but you can play with it and see what it does. I don't mess with that. I keep it as 1. Minimum discontinuity size in points. This is generally, how big this gap should be before it starts considering the fair value gap. Obviously, as small as possible, so let's just keep it as 1 for now. And then we have ignore new day pattern straddles. So this is when the price discontinuities form over new days. If you want to ignore them, keep them as true, but in this case, we'll put it as false so that it doesn't ignore them. And then this is when the same thing happens over a new week in terms of new week opening gaps, and we keep that as false. And when we go OK, as you can see now, the fair value gap shows for this candle, this 3 candle pattern that occurred. And yeah, you can see it wasn't fully mitigated, that's why it's gray. And if we then push forward to our other examples, remember this one that we drew that wasn't showing? Now it's showing because there was a price discontinuity between these 3 candles. It's very difficult to see because of how small these candles are, but it was definitely there. And now it's showing all the fair value gaps. So if you want a true representation of all the fair value gaps, you might as well have that on. But if you don't want to muddle your screen up, you keep that as off. And yeah, this is effectively my indicator. I hope that it will help you guys. It's definitely helped me. It's made my life a lot easier. But even so, it's important as a trader to keep disciplined, keep yourself unemotional, and have the discernment when you should be on or off the screen. Any indicator can help, but it's up to you and how you use it. But yeah, thank you for listening. Good luck with your trades. Thank you for your support, and strength and honor.